Hello, good day, guys. My name is Nick, technical analyst with SuperForex, and today we are looking at crude oil, light sweet oil, and recently we're seeing that oil has been steady after tanking in previous sessions, and oil prices were broadly steady on Tuesday after the previous session's big losses as an uncertain demand outlook held off any boosts which are expected. And we can see, of course, this would have a major effect on the market because Brent crude oil on similarly also rose slightly by 18 cents to $85.99 per barrel at 8:18 GMT, while West Texas Intermediate crude also crawled up about 18 cents to 84.40. And oil settled down more than $5 on Wednesday as a bleaker macroeconomic outlook and fuel demand destruction came into focus following a meeting of an OPEC Plus panel grouping the organization of the petroleum exporting countries and allies led by Russia. Now, after the previous session, big losses as an uncertain demand outlook held off over a boost from an OPEC Plus panel maintaining oil output cut to keep a tight supply. Now, the OPEC Plus ministerial panel made no changes to the group's oil output policy, and Saudi Arabia said it would continue with a voluntary cut of 1 million barrels per day until the end of 2023, while Russia would keep a 300,000 BPD voluntary export cut until the end of December. We will continue to see, of course, that the market in deficit through the fourth quarter and the softer prices reduce the probability OPEC will ease and supply constraints, National Australia Bank Analyst has said in some important note. And this, of course, means that the latest data, which will also show sharp decline in the US gasoline demand, has finished motor gasoline supplied, a proxy for demand, which fell last week to about 8 million BPD and its lowest since the start of this year. The US Energy Information Administration, EIA, reported this on Wednesday. And of course, after a 3-month rally in crude oil, prices has been riding on the narrative of tighter supply dynamics and resilient global economic conditions. So there is some discomfort for the bulls when the tailwinds are not as prominent as before. Now, we are seeing that oil prices, of course, will struggle to push higher given the more uncertain demand outlook, along with a weaker US economic data released on Wednesday and a significant build in gasoline inventories. So we can be expecting a more free fall following this. And this, of course, is a breakout of a very important support zone. And we are heading to a new zone on 81.11, which from this point, we are looking at a wholesome 25 to 30 pips from that point, of course, which is good money. And that's our technical analysis on today's futures, crude oils. And now let's move over to the stock markets. Hello, welcome back, guys. And on today's stock market, we'll be having a look at ExxonMobil. And of course, we can see headlining that Exxon expects a profit bump from oil prices of around $1 billion in third quarter. And this, of course, following that ExxonMobil is expecting gas liquids prices to boost towards the third quarter earnings. And of course, we are looking at a really, really impressive move from ExxonMobil following this most recent news. It had been sitting on a very important support at 110.48, but with the release of this news, we're expecting it to have a recovery of this gap following to the upside. And we are looking at about 41 to 50 pips from that point, of course, which is good money. And a probable halt at this point means that this is an important resistance on at 116.67. And alternatively, if this can get to this point, it's most likely going to hit up to a new zone at 119.34, which is at about 33 pips from that entry point, of course, which is good money. And that's our technical analysis on today's commodity. ExxonMobil. Remain your host, Nick. Bye for now.